What's going on, everybody? Welcome to LUNAR Trading. In this video, I'm going to be going over what RSI is and how to properly use it when trading. So let's get into it. This is one of the few indicators that I use. So what exactly is the RSI? This stands for Relative Strength Index. It is a momentum indicator that is used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of the asset. The RSI will appear as an oscillator that can read from 0 to 100. When the RSI is at the value 70 or above, it's showing that it's overbought or overvalued. If the RSI hits 30 or below, it is showing that it's oversold or undervalued. Now, this is the traditional interpretation of this indicator. People or new traders often think that if the RSI goes below 30, then it's time to get long or get bullish. And if it goes above 70, then it's time to go short or get bearish on the asset. But this type of thinking has caused a lot of new traders a lot of pain, and to take a position too soon, leading them to most likely have to take a loss on their trade because they are forgetting what this indicator is designed for, and that is to read momentum. Let me show you guys some examples of what I'm talking about here. So if we look at SPY on the daily time frame, then I have my RSI turned on. You can do that by just clicking the RSI button. That'd be in the indicator tab. Now let's say back here when the RSI hit over 70, I decided to grab puts. So that'd be around 457. Then what do we see happen? Price still begins to rally up, then it starts to consolidate for a couple days before pulling back slightly, but it's still not even at your original position where you added. And then price rallies and makes a new all-time high before finally pulling back, going below where you added, but it takes over a month. So if you hadn't grabbed the right contracts, the right expiration date, then you most likely would have took a loss on that trade just because you saw the RSI start to head into overbought or overvalued territory. That's because you weren't playing on the side of the momentum. Let me show you guys another example of what I'm talking about. So back here, we see the RSI start to hit under 30, showing that it's getting to oversold territory. So you decide to grab some calls or go long on the trade. Well, that'd be around 445 in this area. But what happens the next couple days? We see price begin to fall all the way down to around 420, from 445 to 420. And then it consolidates for a little bit and then finally pushes above where you added before falling down even more later. So again, if you hadn't grabbed the right contracts at the right expiration date, then you most likely would have took a loss in this trade. Again, let me show you another example. Back here, the RSI begins to break over 70, so you decide to grab some puts, thinking that it's becoming overbought, overvalued. What do you see happen? Price continues to climb upward and then consolidate, kind of go sideways before finally breaking below where you added, taking over a month to do so. Like I said earlier, if you hadn't grabbed the right contracts or the right expiration date, then you would have most likely lost on this trade. This is how most new traders are using the RSI, and as you can see, this traditional method isn't a very reliable or consistent way to use the RSI. And as I tell the crew members in my Discord, consistency is one of the key components to success in the markets. So how do I personally use the RSI? I'm gonna be honest with you guys, I do not use the RSI that much because it is not necessary for my current strategy. But it can be a useful tool at times to help me make better decisions when I should be playing a market side more cautiously, whether that is bullish or bearish. When we begin to enter into oversold or overbought territory according to the RSI, then I'll watch for that momentum to start to slow down, where we might see some consolidation or that move up or down isn't as aggressive as it was before. Kind of like in the examples I was showing you. Like back here, we start to see price consolidate and not move up as rapidly, making new all-time highs as it was during this period. And like on this other example, where the RSI hits under 30, we see price continue to fall, but then it starts to consolidate for the next several days before starting to make a slight reversal or at least rebound up. Another example is right now, we see the market is getting close to that oversold territory, or was at least the other day. If we went back down to this 30 or below level, I'd be playing a little bit more cautiously on being as aggressive, being bearish, or playing puts or going short. As we could see price start to consolidate and maybe bounce up or make a full recover. I also want to mention that I only use the RSI really on the daily time frame, and most of the time I don't even have it on because these moments are pretty rare when it starts to enter into overbought or oversold territory on the daily time frame. But like I said earlier, it is not a necessary component to my everyday trading. It is more a tool I use to be able to see more of a broad market view of when momentum could start to shift in the market. I will be covering the components of my trading strategy on this channel, so subscribe if you guys want to see that content. I do daily stock market analysis as well. And if you would like to get in on my trading alerts and be able to chat with other traders and investors, then join the Discord. Link in description for that. But I hope you guys enjoyed this video. Have a good one, everybody.